Hello everybody, welcome back, good morning. Very early around here, very cold as well, but before I start my day I thought I'd smash out this video. So basically what's happened is we're going to look at Bitcoin, Ethereum and XRP on this one. We've moved into the weekend, and as with every weekend we've begun to pump. Okay, so the pump has begun already very early, and now essentially we've crossed over the centre of the Bollinger Band on the 4-hourly from what I can see here, and it has every means of continuing at least to the top of this Bollinger Band area, 19,550, which is a crucial area because this is where we found ourselves being rejected was it yesterday or the day before, and also there's been a variety of candles closing below there, so that is almost the significant area of rejection that we would be expecting, and breaking above there has the opportunity at that point to make an all-time high, or at least break the $20,000 mark. Now there's a few things we want to look at the moment to gauge momentum. One thing we can look at would be this, which is helpful, but it's not the be-all and end-all. Longs above 70% again. So longs above 70% has a good opportunity to push higher. If we start to see this creeping up, to 72 or more, then that should at that point have an accumulating effect, a snowballing effect, and will actually pick up even more along the way, and probably we'll be looking to maybe reach the most recent highs of around, well, maybe even surpass 20,000. Doesn't look a great deal at the moment because this pump is quite it's quite a new one, as in like it's only a few hours old. And we came down to test this lower zone here of this blue box, and bounced straight away from it. Again on the daily, I can't be mega bearish until we start closing and being rejected from the 10 simple moving average, which is what we are not doing. We're above that. We're also above the 7 simple moving average, obviously. Above the center of the Bollinger Band there. So really it's a matter of looking at these areas now to see if these areas can get taken out. So 19,550, and if that gets taken out, then we'll have another stab, another attempt to try and take out the all-time highs. But again, if the longs aren't increasing a dramatic amount, or if they dip below 70, in my mind I don't believe it's going to have the power to take out that $20,000 zone. But again, there's a lot more to it than this. This is one of the other components that we need to look at, which is the dollar chart, the Dixie. So Dixie on the monthly shows us that there is an opportunity for us to actually set in a reversal here. However, just because we came down to test it, several years ago, in January 2018, which is exactly when Bitcoin had basically put in its all-time high and started to retrace. So that is interesting, but I think that's just a coincidence. I wouldn't say, well, I mean, it will have played a lot of relevance in that. Definitely there's relevance to that, but there's also I think just as far as this chart's concerned, there's also it's just a coincidence, but it can't be ignored that basically we came down to this 200 exponential moving average on the monthly, and that's basically where we found our temporary bottom, our local bottom, and for the next couple of years we kind of rallied all the way up until March, where we had that significant incident, the Black Swan event, the coronavirus, the market dump. And that's basically where the tables turned for the Dixie. As you can see, everybody went into cash, and then cash devalued, and that's what's happened. So, are we going to bounce from here? Well, at the moment it doesn't look great, but if you look at it on the monthly back here, we did spend a couple of months, basically pushing down and being bought back up, and then pushing down, and then eventually being bought back up. Is this the pattern, or a similar pattern to one that we will see? Well, if you look at it on the monthly, okay, this is what bearishness looks like. Okay, so a very strong dollar all the way back here, coming back down, death cross on the monthly. The death cross played out to the extent of, well, we'll measure it from, to be fair, we'll measure it from to the low to there, where we basically came down about 12.5% from there. Alright, fair enough. And then we had our golden cross here, and to be fair, what we'll do is we'll measure it from the lowest part of the candle to the highest point, which is a 7%. So these golden crosses and these death crosses don't really have a great deal of relevance on such a lagging indicator like a monthly chart. But what we have to accept is we are still in Golden Cross territory. Now this is a 2.5 year period that we're looking at here, almost 3 years now period that we're looking at. So that, even though it just looks like a little squiggle, it's not. That's 3 years worth of price action for the dollar. Now, if we do break down below here, then it would get bearish, and then certainly it would be catastrophic, not just for the dollar, but for basically the world in a way. Lots and lots and lots of things are pegged to the dollar. So yes, stocks should go up, commodities should go up, Bitcoin should go up, and they probably will. They'll benefit from a low dollar, but general people are not going to benefit. In fact, it's going to be horrendous for them. A weak dollar is good for an economy on paper, but it's bad for the people who reside within that economy. So I for one really hope that it doesn't break down from below here, because it's just going to have such a dramatic impact on not just Americans but the world, because generally the American economy is interlinked with at least the Western world, if not the vast majority, if not the entire world. So we don't want this to happen for the sake of our children's future. But if we do catch a bounce here, it wouldn't be good for Bitcoin. And on a monthly chart, previously we did bounce from here, and it was a significant bounce that lasted essentially 2.5 years. Well, about 2 years, 3 months. Anyway, that was nice and boring, so let's move back to Bitcoin. In the very short term, we have to take out 19,535 to 550 for an attempt to break up to 20,000. Recent history has shown us that this is a significant area to be rejected from. So let's look at the lower term time frames. We go back to the 4 hourly. Okay, so currently we're struggling to get above that centre of the Bollinger Band, but breaking above there, being supported above there, will allow us to get to these levels, in my opinion. The moving averages say that it can do that, because we're above essentially all of the ones of significance. The money flow index can definitely move up. It's trickling down at the moment, so it's definitely got more room to move. The what are we looking at here? The RSI turning up. It's very indecisive in that respect. Let's go down to a 1 hourly, because it is the weekend, so we have to judge this almost hour to hour. Okay, so this all looks okay to have another stab at least the 19,550. I wouldn't want to get long or short in this area. It's like I was saying yesterday, I did see that there was a pullback likely, and I still believe that there's a consolidation is likely. But also at the same time, this is a bit of a no man's land area. Yeah, we're kind of reaccumulating in this area, you could say, or we're basically redistributing in this area. Either or, it's basically going sideways, which should lend itself to altcoins. Now, talking of altcoins, we look here at XRP, and it looks like it's kind of wanting to drop off. And unlike Bitcoin, we're below pretty much the major moving averages, struggling to get above there. Now, someone left a comment on my YouTube video yesterday where I was saying, things are looking a bit bad, and I said, well, what about the Spark airdrop? But I'll tell you something. The Spark airdrop is allowing people, it's not forcing, but it's encouraging people to hold on to their XRP. So in theory, that will and should keep the price at a certain level. But also what that's doing, it's allowing liquidity for people to dump into. So I'm not bothered about a Spark airdrop. It's nice, but I'm not too bothered about it, and I wouldn't care actually about it. I don't actually care about it. What I would care about is being dumped into heftily, especially if I'd bought areas around these levels or above. I would care dramatically. So yeah, Binance said that we'll make it nice and easy for you to get the Spark airdrop. People are probably thinking, well, that's nice and easy for me, let's buy and get that airdrop. They will have bought in around these areas. They'll be down at the moment, and the way that these moving averages are looking at the moment, they're kind of trickling down. The lower term time frames and the higher term time frames are now beginning to cross, as we've now seen for the first time in a while. The 10 cross below the 50. So that's not a death cross, but it's not a good sign. Okay, so this was great. We have one of those what I call rainbow spreads. This was good for continuation all the way back down here. This is good for continuation, and we've had that. And now what we're having is the opposite effect, and they're beginning to cross over each other. This is just a 4 hourly, by the way. Daily won't look like that. The daily will actually still look okay, but they are starting to curl over a little bit. So this looks to me like it does want to consolidate, and the consolidation will certainly be in the bag if we break down beneath the centre of the Bollinger Band, which is currently at around about 52 cents. Ethereum is extremely, extremely strong, and actually I saw the longs versus the short on Ethereum, and longs are up like 90%. But if longs are up 90%, why is it still not basically rallying any further than where we are right now? I would imagine that a lot of longs are quite safely nestled in around these levels here, which looked to me like a decent accumulation zone before it took that next leg up. So if Ethereum did break down beneath these levels, it would be catastrophic. But for the moment, there's a lot of people that are quite happily and relatively safely nestled in at this level, if not this level, which would have been an even better one to be in. So there's a lot of longs accumulated here and a lot of longs accumulated here. So these areas here aren't really that fearful, and people are still able to hang on to those. Don't think people are looking to take on shorts with Ethereum at the moment. However, if Bitcoin did decide to break down and consolidate, it will take Ethereum with it, and Ethereum, I would imagine, would actually there'll be a tipping point if we were to come back down below $450 and break below there, then there would be a tipping point. We would probably bring it all the way back down to around about 372, but this is a long, long way away. We'll just measure that out actually, just for fun, from where we are at right now back down to this level here, 36% retracement. And actually, if I measure this down to where the bottom line would be, which is this red zone here, that's a 32% retracement. So in that respect, I would imagine that Ethereum would come down to these levels, if not a little bit more, because it just amplifies Bitcoin's moves ever so slightly. But it is definitely strong at the moment. It's definitely strong. Anyway, we're looking at these RSIs. Okay, the MACD histogram's turning up a little bit. That's fine. Money flow index neither here nor there. So let's go to a 1 hourly to see how that looks. And the 1 hourly suggests that we should have probably a little bit more continuation of this move, perhaps today, maybe breaching about $600 or so. I'll be surprised if we start to go rallying much more than that. I think this rally for today anyway will be short-lived, provided that longs stay at 70 or below. If we start to creep up to around 72 or more, then yeah, we could look at maybe throughout the weekend period pushing up a little bit more. But anyway, these are the things to look at. The Dixie obviously isn't going to be moving, but if it were to, it would probably still get rejected around this level here. So 91 is probably the area of rejection, and I think a lot of people see that. So even though we did turn up yesterday and start to move up, which is part of the reason that Bitcoin broke down, I think the overall direction of this is down, and people recognise that, and the fact that we recognise that means that we could anticipate that it will continue down by Monday. But it is a gamble, it is a risk. Traditional markets are closed, and as a result, everything's a guessing game. So one thing you could look at is the weekend is one of those areas where it's really difficult to trade in. It has its own life, it's got its own thing going on. Traditional markets are probably the best way to be trading within, because they dictate the way that everything goes. Anyway, I'm going to leave it with you there. But thank you for watching. I hope you have a nice weekend, and take it easy.